This episode is brought to you by Studios, Tech in Asia's affiliate agency. Hey, that's where I work. Learn how Studios can help your business reach the Asian tech and startup ecosystem at studios.sg today. Hello and welcome to another episode of Startup Snapshot, a Tech in Asia podcast where we're talking to the leaders among innovators in the Asian startup scene about their founder journeys, their highest and lowest moments, and how they've overcome the challenges they've faced along the way. My name's Nat, and I'm so excited but also pretty nervous because today's our first episode with a remote guest, Joseph Phua, CEO of social media startup M17 Entertainment. Thanks for joining me, Joseph.
Thank you for having me, Nat.
Right, so you're dialing in from Taiwan, if I'm not wrong?
Correct, yes, from Taipei.
Okay, so how are you in the office right now?
I'm in my office, and I know you mentioned to prepare and make sure that the room's not too noisy, so I hope this is sufficiently quiet.
Yeah, well, you're our first guest that's I'm not doing the interview face-to-face with, so let's just hope that there's no technical difficulties along the way. But maybe let's get started. Tell me a little bit about what exactly M17 is.
Yep, thank you, Nat. So M17 Group is a company that was formed back in 2017. It came about through the merger between two companies, 17 Life and Paktor, the dating business I founded. And so the group as it stands today is a holding company for a portfolio of various social or entertainment-related products, all within the business of content production and content consumption. You have the brands 17 Live, you have Paktor, you have Hands Up Live Commerce, you have Unicorn Entertainment, and you have other businesses and products that we have that are slightly smaller in growth phase. M17 in itself stands for the production and the consumption of interesting and exciting content, servicing the developed markets globally. We are primarily focused on developed markets, namely Japan, Taiwan, Hong Kong, Malaysia, Singapore, more recently in the US and the Middle East. We are a team of about 1,000 people placed in these markets working on our different businesses.
Okay, so tell me about Paktor, because it's very interesting that you went from Paktor to content and live streaming. But how did you start Paktor?
Right, so it was back in 2012, the summer of 2012, when I was still doing my MBA in Chicago. I had just gotten out of a difficult, a long-term relationship. Gotten out is a nice way of putting it. I was dumped, and so through that summer and onwards into the end of 2012, I started to use different mobile dating applications while I was in the US, and I had a great experience with most of the dating applications. I think at one point in time, I was a paying subscriber to 15 or 20 of them.
Wow, 15 or 20.
Yeah, I mean, it is. The more you open up your sources, the higher your chances.
Right, cast your net wide.
and it was a great experience as an Asian in Chicago, going on a date every single day with the help of these dating applications. I figured that once I was going to come back to Singapore the following year, and after I finished my studies, I was going to start work, and I realized that in Southeast Asia, there wasn't so much proliferation of the similar level of proliferation of dating products in Southeast Asia, and I saw that to be it would be difficult for me to meet new people. And so the first version of a product that I built called Paktor wasn't so much meant for it to be. It wasn't meant to be a business. It was more meant to help solve my own need, and I wanted to ensure that I could meet people. And so it was limiting the number of guys on the platform, but opening up to all the females, and to ensure that I have the highest chance of success. That was why Paktor was started. After we launched it into the market, we spent about $5,000 in 10 weeks building this very simple MVP, and launched it into the market, and it gained a huge following, and there were a lot of people trying to get into the product. But because I had limited the number of guys that were able to come on. So it was there was quite a big hoo-ha then. And that was when I realized that, hey, this is maybe not so much only just about me meeting people. It's about how we can help other people meet more people. And that has been the core of Paktor's mission, which is to connect and connect people around the world. And that's something we've kept held true to up till today.
Okay. And sometime in 2014, which I guess was about a year after you started Paktor, you guys raised quite a bit of money and you were reportedly number one in several parts of Asia. You're kind of conquering the Southeast Asian dating app market. How did you get to that stage?
Now, so you mentioned that we raised a lot of money. I think not many people know the journey that we had to go through to get there, and what we had to do after. So I raised a part of family and friends capital in at the end of 2013. In the second half of 2013, we expanded ourselves. We stretched ourselves to 11 countries across Asia, and we had about 110 employees across the markets that we were in. And we ran out of money actually quite quickly because we stretched ourselves so thin. I didn't understand the concept of maintaining a cash flow, maintaining a burn at that point in time. I remember I was fresh out of school and trying to make sense of the business world.
Right.
And so at the end of 2013, we had to scale down our operations from 110 people to 35 people. We had to reduce the number of markets that we're in from 11 to 4. And the first half of 2014 was actually very challenging. It was very, very challenging. And I mean, I think in that first 6 months of 2014, I would have hit up at least 100 investors. And it was my first time feeling a sense of massive loss, right? And we managed to raise our first external capital. We raised $200,000. Raised $200,000 then in March and April of 2014, and that actually helped us tide across. This external capital came from two investors that are still our investors today, and have continued to invest over the following rounds. Very, very thankful to Will, who is also our current lawyer, our external counsel, and Barnabas, a friend of mine. And so we raised $200,000 from them, and it was a difficult time, but we got through it. And Vertex came in with the first external funding after 7 months into 2014, and we had raised that money, and I think it was faith in the team when Keelok and Juhok and our investment manager at a point in time, Evie, decided to invest into us. Now that actually gave us a shot of confidence, and very quickly in the second half of 2014, we ramped up on our investment into the different markets, investment into product development, and as you remember, we reduced the number of markets from 11 to 4. And during the 6 months in 2014, we really dove into our metrics, our core fundamentals of the product: retention, engagement, monetization, and conversion rates, ARPU, and whatnot. So like the first 6 months of 2014 were literally just all hands on deck working on all these things. And so once we got the funding to invest into a product that fundamentally was sound, that actually helped us grow significantly across the region, across the different markets. And we were then, but by then we already had an experience of what it meant to be broke, what it meant to be down and out.
Right.
And so we were very much more careful in the way we spent our money. We actually made every dollar work for us. And it was, I mean, looking back, would I have changed any of it? No, actually not. If the team and I had not gone through the difficult period, I don't think we would have the resilience to go through bigger hurdles that we would have faced in the future.
Right. But how did that actually happen? Like, was it really just carelessness with how Paktor was spending its money?
It was nice. It was the team naively thinking that things will work out. It was us not understanding the concept of modeling. It was us not understanding the concept of money, right? It was just a confluence of very bad management overall that led to burning that much capital in a very short period of time.
Right. And despite this, your investors still believed in you, and the investors that invested in you then are still investing up to this day.
Yeah.
What was that specific reason that they believed in you and the team?
It's the same thing, I think, across the last. It's been 6.5 years, right? It's been 6.5 years. It's been a long 6.5 years,
Yeah.
and in this 6.5 years, we've had the we've had the we've been very lucky. We've been very lucky to have received the support of so many investors. Right, so many of our investors from day one continue to support us till today, and I think the common underlying theme that investors often say is that they're investing in the team, and that's something that I emphasize over and over again. Like, I am in this for the long haul, and every round I continue to be putting in my own money. Like, I believe in this business, and if investors are putting in their money, then I should have skin in the game as well. So this is everything I have,
Right.
right? And when investors see that you're all in, right? When investors see that you're putting in every single penny, every last penny that you have into this company, then it feels like, hey, it's not only us that we're putting money. Like, Joe is putting in everything that he has. I mean, he has 2 kids, he has a family to take care of, but he's putting every single dollar in, right? So I think that actually helps send confidence. But at the same time, it's also the knowledge and the experience that we've gained over the last 6.5 years. Now, I will probably cover this in the later part of this call, but not many founders can tell you that they've gone through the same type of journey that my team and I have had to go through. And with experience comes luck. With experience comes luck, because you don't have to go through the same thing again. People think you're lucky, but it's not because people think you're lucky. It's not actually because you're lucky. It's because you've already gone through it. You've already paid for it with blood, tears, and money. Right? You paid for it already, and it's likely not going to happen again in future, because you know what to do when things happen.
Right. Okay. Sometime later, Paktor acquired 17 Media. Is that right?
Right. So we actually didn't acquire 17 Live, 17 Media. We merged together with them. I think there was an article that went out that I had to correct.
Ah, I see.
Yeah, we merged together with 17, and the merger actually happened, I think, at the end of 2016, but the formal process closed in the start of 2017, and this merger resulted in a parent holding group of M17 Entertainment, which has eventually evolved into what we have today, M17 Group,
Hmm.
right? Yeah, that was actually the start of truly, I would say, the explosive growth period of this company.
Right. Okay. So let's talk a little bit about that merger. Was that why did you decide to do the merger between Paktor and 17 Media?
Mm-mm. Also, I didn't decide it on a unilateral basis. I had to work together with Jeff, my co-founder for M17.
Right.
Now, this actually go back sometime into 2014 to understand. So in 2014, while we were expanding into different markets, one of the markets that we looked at was Taiwan, and we came in. And Jeff, at that point in time, had also been working on a dating product called Nachi Dating. And how I got to know Jeff is actually a story in itself. So Jeff and his co-founder then, they were working together on this dating product, and I figured, because Jeff, his background, he used to be part of this boy group called the rap group called the LA Boys. Right, you're probably not old enough to know what it is, but I think when I was younger, I heard about it, but even I wasn't young enough. I'm not old enough to know what it is. So LA Boys was actually quite famous in the Chinese speaking part of this world, and he's been in the entertainment music industry for the last 20 something years. But in the public eye, his reputation is more of an entertainer, more of an artist, rather than a business person. And so I figured that the dating product that he was working on was successful because of his partner at that point in time. And I actually tried to poach his partner in 2014. I tried to arrange for a meetup with the partner. Well, fate would have it, Jeff turned up. Jeff turned up together with his partner during the meeting, and I didn't end up poaching his partner. But I got to know Jeff. And since then, from 2014 all the way to 2016, we kept in touch. And Jeff left the dating business in 2015, and together with his partner, decided to start something called 17 Live off the back of Periscope and Meerkat's launch in the US. It was the first mobile live streaming product to have been launched in Asia. And it actually gained insane traction. If you look back, I think it was the fastest growing mobile application at a point in time. It was topping all the different charts across the world, right? In the Chinese-speaking part of the world, in the US, in Europe, in Southeast Asia, across a very short period, it garnered like millions of users. And by then, like quite a few of the Chinese applications had come up, and there were some difficulties in operations of 17. So in 2016, 17 had not seen the same type of growth it had experienced in the second half of 2015.
Right.
And so when I met Jeff in the June of 2016, we had I still remember we had lunch. We had lunch in right in the city of Taipei, and I think it was I don't remember the name of the restaurant. I remember the image at lunch, and I was coming out of a fundraise round of, I think I raised $10 million, and Jeff had asked me, so Joe, how do you go about raising money, right? Why are you able to continuously raise? And so I explained to him, and I asked him what difficulties he was facing at that point in time, and he had mentioned that, well, they had a funding round that had fallen through, and they were experiencing some growth, but they needed more capital to push that growth. And so I took a look at his numbers after the meeting, and I soon realized that, hey, Jeff, although the public impression of him may be an entertainer, maybe an artist, but actually Jeff is very business minded, and he knows what he's doing. And but this business is lacking oxygen, it's lacking funding, and Jeff does not have the experience with fundraising. And whereas on our end, like I think our business, the Paktor business was growing very healthily,
Yeah.
but possibly not as explosive as 17. And perhaps there is an opportunity then, I thought, for us to come together, and we can lend our skills from operating a company, in terms of from the dating business, and from a fundraising perspective, come together with Jeff in this business that's actually just starving of oxygen, and if we were to lend some oxygen to it could explode. And so that was what we did. We ended up putting the two businesses together, and it was true enough. In the fourth quarter of 2016, we lent some oxygen into this business, and it started to show the type of explosive growth that we were expecting to see. And upon the full merger of the two companies, we were able to then give it the legs to grow. Just to give you a sense of this explosiveness, in 2016, it was I think full year wise, Paktor was larger than 17. We did I think it was like a $7 million. Again, I need to double check, but I think it was $7 million in 2016.
Right. Okay.
And then in 2017, we did 90 million. In 2018, we did 175 million.
Wow.
And so it was literally explosive business, and we're on track to next year's revenues of 400. Right? And of this, so from 2016 to 2020, in a very short span of just 4 years, we've grown from $7 million to about, we will grow from $7 million to about $400 million. And 95% of this business is going to come from the entertainment piece of this company.
Wow. Okay. So that exponential growth actually led to the decision for you to list on the New York Stock Exchange. You guys did an IPO in 2018. Let's talk a little bit about the IPO. What happened with the IPO there? What led to the decision to list on the New York Stock Exchange? And maybe to start with that, what led to the decision?
A lack of experience, I guess. And when people sell you stuff that you want to believe, that leads you to make decisions that otherwise may not be the right thing, right? and we were coming off a round of fundraising. We had finished just a round of fundraising, and we met with some people, and we were contemplating what next in terms of a corporate planning, in terms of fundraising, in terms of what next, and the idea of listing actually came. And when we assessed like valuations, wow, it was like, oh, you mean if I were to list, I can get, let's say, a valuation that's 5x, 6x, 10x of what the last round I raised at.
Right.
And as a young founder, as a young manager of this company, of course, then you're sucked into the process. You self-rationalize. You believe that, hey, that's the right thing to do for the company, and you believe that, hey, doing that actually helps the company.
So it just kind of looked attractive as a prospect for you as a young founder. Was that the primary reason why you guys decided to list on the New York Stock Exchange?
No. So I don't think my shareholders would have allowed for that. So shareholders are much more sophisticated than that. But that actually helped. That actually catalyzed the process, right? So that's how we actually started to think about it. Now, upon looking at it, we rationalized to ourselves, right? So why would it make sense? Firstly, we were in a mode of acquisitions. I mean, if you look at the history of M17, we generally make one acquisition or two a year, and so we are quite an acquisitive company by nature, and so having public capital to do this would actually help speed up the process that we're able to acquire companies instead of having to raise money each time we want to acquire a company. That's I think one of the key things. Secondly, um, this listing would have actually helped us gain awareness in this in the markets. Like even till today, there's some vendors where we're unable to get, let's say, better terms on cash payment, because they only deal with better terms on cash payment for listcos.
Right.
Right. So we saw that to be advantageous in terms of scale, in terms of awareness for a company to be able to get better terms across our business dealings. And I think lastly, we were still in the midst of fighting a war with the different competitors at that point in time, and being a listco would have gained credibility amongst the content producers and the content consumers, and would have allowed us a leg up in this war that we were fighting. So, I mean, aside from the funding and the capital that we've gotten, which was an injection of, let's say, $150 million, which was significant to us at the point in time, I guess these were the other three reasons.
Okay. And well, as a lot of people would know, it didn't exactly work out. What happened there?
It was the 7th of June, 2018. Yes, it was 7th of June in 2018. It was a Thursday. It was Thursday, I remember very clearly. And we rang the bell at 9:30. Had our team, had our families all there in the New York Stock Exchange, and we were just waiting for the first trade to start at about 10:30. I'm trying to paint this as vividly as I can, because this is the image that I see almost every single day when I close my eyes. It was 9:30 and 9:40, about 9:40-ish, about 10 minutes after we rang the bell, I was informed by one of the underwriters that there were some issues with one or two of the trades that one or two of the investors that were supposed to, in the order book, that were supposed to complete. And when I had dug deeper, I realized that two of these investors had not completed the regulatory processes to be allowed to participate in a process like this. And so then we were scrambling, like from 9:40 all the way up till 11 o'clock. We were scrambling for different ways. You can imagine, I had all my investors there. Well, most of my investors were there, and I was going investor to investor, seeking for assistance to see if we could get past some of the red tape that I had just heard.
Yeah.
And there was no way. Like I remember Shang, my CFO. At about 11 o'clock, he told me, Joe, it's not going to happen today. So let's go back to the boardroom. Go back to the boardroom next door, and let's just delay this for, let's say, 24 hours. Right. And I remember telling him firmly, no, this is not going to happen, because we're not going to delay. We're going to get it done. We're going to get it done right now, because, hey, the whole team of 600 people in Japan and Taiwan, and everyone is expecting us to get it done today. Like, how can we even postpone it, even for a day. It's not possible.
Yeah.
Right? But I soon realized right after that there was no way around it, given that the red tape around the regulatory process needs to be complete, and usually it would take 2 months. But what the underwriters are telling me is that maybe there are ways that we can fast track this so that that the one or two investors can get it done. And so we went to the boardroom, and over the next 4 days, right? So from Thursday, Friday, Saturday, Sunday, the next 4 days in Eastern Time, New York, right? I worked. I think we camped out. We camped out in a boardroom. We camped out in a boardroom in one of the banks, and we were working with the bankers and some of our investors over the next 5 days to try to figure out how to fix this problem. And we couldn't come up with a solution. We couldn't come up with a solution then over the 4 days. But on Monday, just before markets opened, we had a solution. And there was some creative workaround where we could get this one or two investors past the red tape and actually get them to close on the deal. And so we were about to embark on the process that should have been completed on Thursday. But when we went back to the markets, and told them, hey, we've already completed the process and we're ready to go. The feedback was not that positive,
Right.
Because when you have what's supposed to be a very well run process, when a process like this suddenly gets delayed by 4 days, it sends thoughts into people's heads like, what's going on? What's wrong? Right? Why has it been delayed? And is this safe? Maybe I should not invest, and maybe I should pull. And so, although people were committed and people were saying that they were still in, it gave me a sense of it was not a very good sense. I had there was this thing ringing on the back of my head. Even if they're still in today, possibly could happen is right after we open and we start trading, we could see the stock plummet. We could see the stock collapse, and I would suddenly wipe off hundreds of millions of dollars of value from the company because I would have forced something through. And so that was like a wake up call, and I realized that I cannot risk taking away so much equity value from the company for something as non-essential, something that is not important, something that it's so irrelevant to the value of the company. How can I open trading, expect and possibly see hundreds of millions of dollars wiped away from the capital, the equity value of the company, because of something as irrelevant as a trading process, a trading rate tape that we had to go through? I mean, it just didn't make sense at all. And so I had to make the call then to just pull from the whole process, and we'll come back another day.
Right.
And it was one of the most difficult times I had to go through, because I mean, I believe that money and business and running of growing the company in the future, that wasn't so much a concern for me, because I believe that we have the team, the business has not changed, everything is going to continue growing the way it needs to continue to grow. I have absolute faith in that. It was more about answering. How do you answer to the 600 team members that are waiting for you in Asia? How do you answer to all the investors that have put in their faith in you? How do you answer to every single one of them who flew all the way to New York with you? How do you answer to all of them? I mean, I didn't even think about my family. It was more about how do you answer to everyone, right, who put faith in you. And that, I think, it's key. Like when you're running a business, and I tell a lot of the founders that I meet, like as the CEO, like the buck stops with you, right? It ends with you, and everything is on you. Now you have failed the people who put their beliefs in you. You have failed everybody who has followed you. How do you answer to them? I think that was the hardest thing. It was not so much about, are we going to run out of money? Are we going to be able to grow the business? I think that is not. It wasn't even any type of consideration. It was a given. It was more about how do you overcome that
kind of breach of trust.
Correct. The breach of trust, the breach of faith, and everybody put everything into you.
Yeah.
They put their beliefs into you, because that's something I've always prided myself. I never let anybody down. When I say something, it gets done.
Right.
Right. If I cannot do it, I don't say it. And that's actually helped me in over the last 6-7 years, because every time I say something to my investors, I get it done, and so people believe in me. And this is the only time that I've not been able to pull through what I said I would do. I mean, now of course, looking at it in hindsight, it's not that I won't get it done. Then I'll eventually get it done. It's just a hiccup. I've just delayed it in time, but at a point in time, I was like, shit.
Yeah. Well, everything looked a lot more insignificant in hindsight. But M17 actually came back from that moment very shortly after you guys announced that you were profitable and growing after the aborted IPO. How did you get there from a very tumultuous moment in your journey as a founder to actually running M17 profitably?
Um, when I came back from, no, actually after New York, I went to Chicago. So I did my MBA in Chicago, and so I brought my family to Chicago. During that during the 4 days there, when I was in Chicago, I holed myself up in the hotel room. I didn't go out. I watched a lot of Netflix, and my family went out, and I was trying to come to terms at what had happened, what had just happened, and I was trying to figure out what best, what next, um, and over the 4 days, I came to terms with what had happened, and I was trying to draw upon books that I've read, trying to draw upon different things that I've seen happen across the world, to try to figure out what next, what steps next. And I actually drew what I did over the last year, right, from mid of 2018 to the mid of 2019. I drew courage and lessons learned from a lot of the books that I read as a kid, in terms of the wars that were fought in the olden days. And so when you fight a war and you lose in the front, what do you do next, right? And if it's a major loss, what do you do next? I think across most of the books that I've read, the first thing that people usually do when they lose wars is that they come back and they have to fix morale, right? You can lose the battle, but you cannot lose morale. You are only as good as the sum of parts. And if the morale is not there, the parts are not there. And so the first step that was done was to ensure that the morale on the team was rebuilt. So I moved my family over from Singapore to Taipei. I sat in the office every single day to make sure that everybody knew that I was here for the company. I was here to fix the company, and we will get past this. And that was the key. That was the key thing, right? For in Q3 of last year, the only thing that mattered to me was to make sure that the morale of the team was back where it needed to be. And I think we successfully did so with a few changes within the company, and the fact that it was all hands on deck. People saw that the management was here to push the team forward.
Right.
Right. So, of course, on the back end of it, I entrusted in my CFO, my COO, Sheng and JS, to work on cost cutting.
Mm-hmm.
Right. Once you come out of a listing, you would have expected a lot of funding to come in from a listing, and when the funding doesn't come in, then you're going to be short of funds. And if you're going to be short of funds, then because you would have overspent. You have overspent, or you have over structured future spends. And so the Q3, while I was working on morale, I had my COO and my CFO work on cost cutting.
Mm-hmm.
So once I had gotten the morale back up, cost cutting is only going to get us that far. We still need to do what they usually say in the books. The second thing that's important is that after you build up your morale, you got to build up your resources. And resources in this case is actually funding. And so we went out to raise a round. And while we were raising a round, like, investors saw that the unit economics of the business is actually improving, and we were cutting our losses, and it was actually quite positive. Financials were showing a very good trend up, and in Q4 we managed to raise a round of funding. And after we closed the round of funding, we continued the same path, optimizing for cost, optimizing for efficiencies, optimizing for fat, right? Optimizing against fat. And so at the end of Q4, we laid off 70 people. We laid off 70 people, about 10% of our workforce. And that was because we overexpanded in Taiwan. We overexpanded in Taiwan, and we were pulling back from this expansion because this market was becoming very established already, and well, we weren't seeing the type of expansion that we were projecting, and so we had to lay people off to counter the over hiring.
Right.
And then in 2019, I would say actually it's the pivotal moment. So now after morale is back up and after you've managed to recoup all the resources that you need, what do you do next? Right. So it was actually a lot of focus around people. So now the team today is close to 1,000 people.
Mm-hmm.
And I've realized that when you run teams from 0 to 100, 100 to 5, 100 to 200, 200 to 500, 500 to 1,000, and 1,000 and up, right? It's a very different from different stages. And like I previously prided myself on the fact that I would work harder than the next person. I would work alongside everybody, and I would touch almost every single thing that they held in the company was going on in the company. And it was a very flat structure in a sense. But I soon realized that, hey, if I want to scale this company up, it's not possible to continue down the route. I need to hire very capable managers. I need to hire very capable individuals. I need to instill the right culture in the company. I need to set the right visions, the right missions. I need to set up the right processes in the company. I need to make sure that the growth and whatnot is around the people. We've hired, I think, close to 190 people this year to date. So about 25% of our workforce, and 25% of our workforce we've hired since in the last 3 quarters. And I've interviewed 300 people.
Wow. Okay.
I personally have interviewed 300 people in the last 3 quarters, and I made it a point that every single other person that comes into the company, the last interviewer is me. I want to make sure that I know who's coming into the company. I want to make sure that our values are aligned. I want to make sure that I can see this person working together with the team. I've stopped that since, because we're close to 1,000, and I can no longer manage the number of interviews I need to do. But beyond that, right, the interviewing process is one, the hiring process is another. Orientation, we've bulked up on orientation process. We've set up the right KPIs, SOPs around reviews, promotions, bonuses, incentives, and I think the people aspect is the key thing that we've really worked on.
Yeah.
So obviously, we've done many different things, like going down our cost optimization, increasing our pool, increasing pay users, and increasing traffic, diversifying our businesses and whatnot. I think that is a given. But the three key things that we did, right, in the last year was, we regained morale, we got the resources that we needed to do, and we hired the right people. And so we turned ourselves from a loss position last year to a profitable position this year. And I haven't seen another company do it that quick.
Yeah.
At the scale that we've done it.
Yeah, that's an insane speed to get, from like within about 6-7 months.
Yes.
Was it something that you were aiming for, profitability, or was it something that, you're just changing the company's culture one step at a time, and when it came, it came?
Right. So we were aiming for actually the end of 2019.
Okay.
Right, but it came 12 months ahead.
Wow.
Right. So we were profitable. We have been profitable since the start of the year, and I soon realized it's a choice. Whether or not you want to be profitable in our business is a choice. It's not that you can. In our business, if you're not profitable, it's because you've chosen not to be profitable.
Okay. Why do you say that?
This business is highly profitable.
Uh-huh.
Right, the business that we're in of entertainment and production of content and content consumption is highly profitable. The reason why we've not been profitable in the past is because we've always been investing, and we were a little lax on how we pick our investment projects and assessing investment opportunities. I think that's the key thing, and we've scrutinized every single piece, and we've hired the right people to help us do this. I think that's the key difference. Obviously, I say it easy. I say it quite easily today because we're profitable,
Yeah.
and and maybe a lot of our peers may be looking at me and, dude, it's only because you're profitable. That's why you're saying you choose to be profitable otherwise. But we also have to scale. So maybe thankfully we have to scale. And yeah, I mean, this business is on track to generate about $400 million next year profitably. So would you say that this has been a feat? I would say that this is a result of everything that the team has done, the resilience that the team has shown, and our belief that we can actually make a difference within this ecosystem that we've built.
Right.
Yeah.
Okay. Well, before we got into this interview, there were some discussions, back and forth between our side and your side. And one thing that was mentioned is that you guys are aiming for annual revenues of over $1 billion USD. Will that time come anytime soon?
Um, that is obviously a number that we have internally that we need to get to.
Mm-hmm.
Soon is relative, right? What is soon? Is soon tomorrow? Is soon a year? Is soon 2 years? I would say that it's a number, it's a goal that we have internally. We have a path to getting there. Our growth trends have shown that we can get there within a certain period of time. But I've been advised that I should never put a time on it. I should always just say when it happens.
Okay.
But we are moving very quickly towards the number, and I would be surprised if we don't get there soon.
Okay, well, I'm very excited to hear when you do reach that number. With the entirety of your story that you shared so far, starting from Paktor, what was a key takeaway from your entire journey that you would want people to keep with them as they finish up listening to this episode?
I think it's realizing. Right, so if you ask me what's one key thing,
Mm-hmm.
it's realizing that there is no one key thing.
Right.
Right, realizing there is no pivotal moment. Right, we are a sum of parts. We are a sum of experiences. We are a sum of the lessons we've learned, and hence there is not one key thing that determines what will happen in the future. In fact, it's everything that you do every single day. It's every single day, every single thing that you do. Like, we used to have a policy that said for flights longer than 6 hours, you're allowed to take business class.
Mm.
Right? We scrapped that policy altogether, and that's across everyone. Even if you're going to take a 20-hour flight, you're going to take it on economy. And I've flown to LA multiple times this year. I've flown to the Middle East multiple times this year, and I've always been on economy. Right? So this is one thing, right? But does this determine the success of the business? No. Right? So this just helps control costs.
Yeah.
Right? But everything put together will determine where you land, and the more everything's, if there's such a word, the more things you go through, the higher the chance of your success in the future. And success is the definition of success is determined by yourself, right? And resilience is very important. So if you can overcome difficulties, if you continue to believe, if your team continues to believe, you will eventually get to where you need to get to. So there isn't one thing. I think, yeah.
Okay. Well, thanks so much for sharing. That's all the time we have for today's episode. But thank you so much for joining me, Joseph. To all our listeners who wants to know more about M17, you can visit the website at m17.asia. And until next episode, that's the podcast. Thank you so much for listening, and thanks again, Joseph, for sharing M17's story. If you like what you hear, subscribe to us wherever you're listening from. We're uploading episodes every other week, and we've got a great lineup of guests whose stories I'm very excited to share with all of you. All our episodes are on Apple Podcasts, Spotify, YouTube, and wherever else you get your podcasts. And you can also find episodes on the Tech in Asia webpage at techinasia.com/tag/startup-snapshot. If you want to reach us for any reason, you can drop us an email. Reach me at podcast@techinasia.com and let me know what you thought of this episode. I'd love to hear from you. Thanks again for tuning in to Startup Snapshot. My name's Nat. Goodbye.